Good morning, everybody. Very late start to the day today. It is already 9:20. We're gonna be trading remote today, and we're gonna go to Top. So I'm gonna get changed, brush my teeth, make a little bit of breakfast, and start heading down to Top Golf while looking at the charts. But welcome to day 4. Yeah, day 4. It's June 4th. I'm super tired. And last night it took like till 3:30 in the morning for that video to get uploaded, so that explains the lack of sleep. But I'm gonna get to getting, and then I'll catch y'all on the church probably. Good morning, y'all. It's 9:42 right now. We're about to start heading to Top Golf. As far as the charts are looking, we've been very bullish since open. We've swept all of our intermediate highs here, so at this point we have some fibs to the upside here, some standard deviations that we're going to be coming up to soon, and other than that, yeah, we're just gonna be watching the charts for now. Haven't really found any levels that I like yet. But also haven't really sat down to really focus on the charts. But once we do get to the driving range, we will get that done. Top Golf in the morning is always fun. $15, I can play for the whole morning and really, get a mastery of my clubs. But also gonna try to play a virtual round, see how much we're improving, how many strokes we're gaining or losing for that matter. Not really much now, but I'll catch y'all at Top Golf.
I got it on my head, money on way. I see his hunts all day. Top shelf fish saute. Cono in LA. President rolling with the date. Pulling out the foreigns, we could race. In and out of state. We can relate. I gotta stay late.
10-11. We just made it to Top Golf. I know y'all see it out there. We're about to run up there, get set up, and start looking at the markets. Well, when we get up there, we'll have a better look at it. But yeah, I'm gonna get up there and then we can start golfing. So peace. We're here at Top Golf. There's some fans going on, keeping the air circulating. That's the upper hand they have over Drive Shack. But really looking beautiful out here today. Great weather. They put us all the way in the corner, so we have a great position. Probably gonna hit somewhere around like 150 balls or something like that, or probably even more. We're here and we ready to go. So I'm gonna set up the computer and then we're gonna start hitting a little bit. Nothing too crazy today. Nothing too crazy. So I'll catch y'all on the charts. All right, got a trade running here. CISD, SMT at the lows, rejection block, and inversion. So textbook setup. Aiming for the New York highs to be taken out. Already can see an execution there, or 2 executions. Got stopped out the first time. Should have probably entered on the CISD or the IFBG since we hadn't retraced into it. But we're just watching price now. But yeah, we're just chilling here golfing. It's a nice day. So yeah, peace.
On your promotion, I give you a raise. Photos I'm pushing, feeling intoxicated. Feel like the ocean, I'm gonna go crazy. Tropical bitches, the hell with it, wait. Put a big double M on my Mercedes. Got me some million, no minimum wage.
Alright, just got finished off at Top Golf. I had probably one of the worst virtual rounds of my life. And also lost 2 trades. So not a great day today, and unfortunately we still gotta go to work, so we're gonna get packed up and out the door. Alrighty, walking out of Top Golf. Bad trading day, bad golf day. Better not be a bad work day. But yeah, really didn't do a lot today. My back is killing me, so tomorrow we're hitting the gym again. I'll probably figure out something else to do, but that's gonna be it for today, most likely. What up? I know y'all didn't think I was gonna leave you with no lesson for today, As you all know, the last episode we were talking about trends and market structure, and in the first episode we were talking about candlestick anatomy. Today we're going to be talking about something a little bit more important and a little bit more substantial. So this one is definitely one for the ages. Today we are talking about liquidity. All right, liquidity and imbalances. Okay, liquidity and imbalances. These two things basically drive the whole market. Okay, these are the invisible forces behind the market. This is the reason why price seeks the highs that it does and why price bounces off the areas that it does, because it's seeking liquidity or rebalancing these imbalances. Okay, so first we're gonna go through liquidity. So when we are trading, there's a few definitions of liquidity. All right, so the catch-all liquidity term is simply just the amount of shares that are available to be purchased or sold. Okay, so the liquidity of an asset is the amount of shares or contracts that you can sell or buy of that asset without affecting the price in any meaningful or significant way. So most assets that will have a lot of liquidity in this sense are going to be like, your big tech stocks, your big indexes, especially when they're being traded in their proper exchanges. But generally, when we're talking as ICT traders, liquidity refers to the buildup of orders at certain highs, lows, or other spots in price action. So basically, liquidity, when we look at the markets, liquidity rests above these highs and below these lows. So what we assume price to do is to sweep liquidity and then reverse and do the same thing all over again. So literally almost any high that you see has some form of liquidity above it. Whether it'll be a sweep or a breakout, we don't know. That's why we backtest and we trust our strategies for things like this. But in the grand scheme of things, your liquidity is just the sell orders, buy orders, or market orders that are resting above these intermediate highs and lows, these major highs and lows, and everything in between. Okay, now with that definition of liquidity, you might be asking, Kevin, that does sound a lot like what volume is. And while they do sound extremely similar, volume and liquidity are different simply because volume is the amount of liquidity. All right, volume is the physical number of shares that were traded during whatever session or time frame that you're looking at. So you can look at volume on a daily basis, you can look at volume on an hourly basis, you can look at volume on a minute by minute basis. All volume is telling you is the amount of shares or contracts of an asset that were traded within that time period. While we're trading, we want to identify our major pools of liquidity, and our major pools of liquidity are going to rest where? Above major highs and below major lows. So what we want, the mindset that we're putting into these pools of liquidity is that smart money is going to grab orders from these levels to either continue in that direction to rebalance some imbalances, or to reverse after collecting a whole bunch of orders and bringing it to the opposite side so they can profit off of it. As day traders, we don't have the volume to affect price the way that institutions do. So we want to trade how we think they would trade. I'm not saying that we are doing that, because obviously none of us are high frequency traders or anything of that kind of fanciness. But
when we are trading like the banks, we are trying to put ourselves in the mentality of the banks. It's not that we're physically taking the trades like the banks, it's we're trying to think how someone with a lot more buying power, someone who could actually move the markets would think. So our major liquidity is going to be above our highs and below our major lows. We also have something called low resistance liquidity. So we have the high resistance liquidity or major liquidity, and low resistance liquidity, or you can also call it minor liquidity, I guess. Low resistance liquidity is going to be that rests above our internal highs and lows. So on the high time frame is where we're going to see the high time frame highs is more confluence or have more liquidity resting near them than we would assume lower time frame ones do. And that's simply because higher time frames hold higher power. So time frames that I like to look at for our levels of liquidity are really just the 15-minute and up, but my most important ones are going to be the 15, the 4 hour, and the 1 hour. Daily levels are also super free. So definitely would not stray you away from taking something like that. With that being said, let's identify some liquidity. So we're going to go on the 1 hour chart. We can get rid of this stuff here. And we don't even have to go far. As you can see right there, right in front of our faces, we have an area that has a beautiful high, a big high, nothing near it. And we're trading mighty close to it. So caveman brain should say, okay, this high, we want to see either the high be taken and something happen, or we want to take a trade off of the reaction to the high. So identifying these super high levels. So we have that high there. We have these lows here. We have these internal lows as well that weren't quite swept, but are still just, resting here. When you have lows that are very close to each other, relative equal lows, as you might have heard before. Oh, that sounds really familiar now, doesn't it? Relative equal lows are also a very strong point of liquidity. A lot of orders build up at these relative equal lows. Same thing with equal highs and relative equal highs here. So you see we had equal highs with this candle and this candle here, and then we swept it, and it looks like we are framing a reversal anytime soon. That's basically liquidity in a nutshell. You see we have highs and lows. When we sweep lows over here, we have reaction, and then we sweep internal highs and have another reaction. Not quite sweep the lows, but we balance an imbalance here and then react, and so on and so forth. That's basically the entire game of trading. Imbalances are simply just these gaps that are left behind when price expands with speed in a singular direction. So when price expands with a lot of volume and a lot of haste, it leaves behind these big gaps in the price action that generally do get traded into quite a bit. So you see, even right here, this New York Open fair value gap here, if you would have, normally when we trade, I don't like to take the beginning of any kind of PD array. I'm addicted to the CE, so I would have taken the CE here, and if you were swinging this, you would have got entered here, almost stopped out here today, but you still would be in profit. And that's another thing, like you can use all of these levels to take swing trades. You can use these levels to take month-long trades if you wish, or you can use them to take trades in the moment, in the minute. It's really all up to your level of skill and your trust in your strategy. For our imbalances, we have bullish and bearish imbalances, and they are simply characterized by the direction that the candle in the middle is going. So a bullish imbalance obviously would have a bullish candle, and a bearish imbalance will have a bearish candle in the middle. The other two candles don't really matter so much. I would say maybe it gives a little bit more confidence in a certain direction if all the candles are, bullish or all the candles are bearish. But generally, that's just not something that I've personally paid attention very much to, so I cannot attest to that, whether I've seen it in back testing or anything like that. But those are the two most basic types of imbalances. This liquidity lesson was quite long, so I'm gonna just save the imbalances for another episode. So tune in tomorrow for another lesson, and we'll be doing a much deeper dive into imbalances. But for now, it is 1:30 in the morning. I'm finishing up this lesson so I can finish up this video, and I can call it a night. So thank you all for watching. Thank you all for 300 subscribers. Almost completely forgot. Absolutely mind-blowing. We are at 300 subscribers. Last year, this time, I think we were at 30. So we have 10x our sub count in a year, which is crazy to think about, but I really do appreciate you all so much for watching. Hit that like, hit that subscribe. Let's try to hit 400 this month. Sky's the limit. But hope you all learned something new today, and I will catch y'all in the next video. Peace.